Hey guys, welcome back to another video lecture. In this video, we're going to review for the exam. I'm just going to point out some of the important topics that will be tested. So the exam, which is exam 2, covers chapters 18, 19, and 20. It's a 30 question exam. The exam is open for 3 hours, so you have 3 hours to complete the exam. Again, multiple choice. What I'm going to do here is I have the ebook open, and I just want to kind of go through and point out what's important, what you should know, some things that will be definitely be on the exam. So in chapter 18, we talked about short-term financing and planning for short-term the financial needs. So we looked at tracing cash and net working capital. Okay, so if I were you, I would know what some of the activities are that impact cash, right? So if you see here, there's activities that increase cash, activities that decrease cash, right? We talked about those during class. So if I were you, I would definitely focus in on those and understanding which activities have an impact on the cash, right? What are sources of cash? What are our uses of cash? Okay. We also talk about net working capital here, right? So if I were you, I would know this equation or the identity of net working capital. I would also know what types of transactions or what types of activities have an impact on net working capital, right? Meaning if we increase our liabilities or decrease our liabilities, that has a specific impact on net working capital, right? Same thing with other liabilities. Other liabilities are going to have, other current assets are going to have an impact on our net working capital. So just knowing how those change and what they do to our net working capital. In addition to chapter 18, we talked about the operating cycle and the cash cycle. So I would know both of those. I would know what is how to define the operating cycle, what impacts the operating cycle or the components of the operating cycle. I would also know what activities or what transactions impact the operating cycle. If we increase accounts receivable paid or if we decrease the accounts receivable period, how does that impact operating cycle? Same thing with inventory period. So you definitely want to know the components, kind of the, for lack of a better term, the equation for the operating cycle. Same thing with the cash cycle. You'd want to know what is the cash cycle. You would want to know what impacts the cash cycle and what is the equation. Okay. So this slide right here, great thing to study and make sure you understand. Remember, certain things, when I say certain things, I mean certain transactions or certain activities are going to either increase or decrease that inventory period or that accounts receivable period. So make sure you know those. Let's see what else is fair game on the exam. I would definitely know the operating cycle, how we calculate that, right? We did some examples in class talking about the inventory turnover, the inventory period, the receivables turnover, the receivables period. Same thing with the cash cycle, right? How to calculate those. The payables turnover, how to calculate the payables period. And then in chapter 18, we talked about short-term financing, right? And well, that's pretty much what the chapter was about, really. Bear with me here. So we talked about some things like compensating balances. We talked about secured loans. We talked about inventory loans. So I'd have an idea about those. One thing I would definitely know is there's two types of policies, cash management policies that, sorry, I think I'm probably making you guys sick here scrolling. But we talked about two types of policies, right? We talked about, where are we at here? We talked about the we talked about the flexible short-term policy, and we also talked about, I believe it was called the stringent policy. So I would know the characteristics of those, right? What kind of policy are we using? And I know there's slides in the slide deck for chapter 18. So that's the material on chapter 18. The next thing we got to look at is chapter 19. So let's go through chapter 19, and we'll pull out again what's important, some things we talked about that you should focus in on your studies. So chapter 19 deals with cash and liquidity management. When we first started talking about this, we talked about the reasons for holding cash, right? We had the speculative motive, we had the precautionary motive, we had the transaction motive. I would know those. I would know all three of those, know what they entail, right? What are the advantages of these? What are the disadvantages of these? What are the purposes of having speculative motives or precautionary motives or transaction motives? So that's on page 641 in your book, and again there are slides that go along with that as well. You should understand cash management. Why do we manage cash? What's the purpose of managing cash? Then we talked about understanding the float. What is the float? The disbursement, the collection float, the net float. I would have an understanding of those. What is the purpose of the float? And there actually is a question on calculating both the collection float as well as the disbursement float. So we worked on some problems in class together. But if you have any questions before or after you watch this video, and obviously before you start the test, text me. I'd be happy to have a discussion with you and walk you through it and even work on maybe an example problem or something. You just got to let me know. So the floats are definitely going to be on the exam. Let's see, what else do we have that's good? Collection time, that's also going to be on the exam. So if I were you, I'd probably know what are the components of collection time. What can we do to actually affect the collection time? Don't worry about lock boxes. Cash concentration, we're not going to have anything like that on the exam. So that's it for cash collections and concentration. There is a question on some of the definitions here, right? Zero account balance, collectible disbursements, So that's pretty much it for chapter 19. Oh, I would also know what a repurchasing agreement is. We talked about that. That is one of the vocab words. So I would definitely know what a repurchasing agreement is. Excuse me. And then we end with chapter 20. Chapter 20 deals with credit and inventory management. So this chapter was sort of a little redundant from what we did in introductory to corporate finance. So this part should be relatively easy. If I were you, I would focus in on components of the credit policy, knowing what the terms of the sale are, knowing what the credit analysis is and why we do it, as well as the collection policy. I would know those definitions. Always a good idea to know the cash flows from granting credit. This is sort of a recap from chapters 18, or excuse me, yeah, chapter 18 and 19, when we talked about financing and liquidity management. So kind of a carryover from that. I would know, again, the terms of the sale, right? What's the form? What is it saying? In other words, we have here 210 net 60, right? What does that mean? Being able to, again, it's multiple choice, but to see verbiage and say, oh, 210 net 30, it means that I get a 2% discount if I pay within 10 days. If I don't pay within 10 days, I owe the total bill to I owe the total amount of the bill within 60 days. Let's see what else here. Credit period. I would know the credit periods. I would know the invoice date. Why is the invoice date important? I would know what a cash discount is. I would know how to evaluate a proposed credit policy, right? No calculations on cash flow. We don't have to worry about that. We worked on that in class. Those concepts really won't be tested per se. The exam's more high level, making sure you understand the overall concepts. Okay. Another thing that is definitely on a test is credit analysis. Why do we do credit analysis? What is it? Okay. What do we have, or let me rephrase that. When would we do credit analysis? Do we have a one-time sale? Do we have repeat business? What are the aspects of that? Meaning, what are the drawbacks or the advantages of offering credit to a repeat customer, or adding or offering credit at a one-time sale? Also too, I would know the credit policy, right? What are the, let me get there for a second. When we're offering credit policy, what are we financing, right? We talked about that in class. We talked about the time period that we want to choose has to deal with the time that it takes the person or the company that we extended credit to. How long does it take them to turn over their inventory? Okay, so that's one thing that'll definitely be on the test. That's pretty much it. Oh, one last thing. It was in the slides. We kind of breezed through it in class, and I says, hey, you know what, just read it out of your book. The 5 C's of credit. There's a question or two. on the exam dealing with the 5 C's of credit. Okay, so you have pretty much all the material that's going to be on the exam. So look over your notes, look over your PowerPoints, look over the chapter in the book. We went through some of the pages that the material was on. If you have any questions on how to calculate certain things or understanding any concepts, just text me. Be more than happy to have a discussion with you. Totally not a problem. The exam obviously opens today. You have an entire week to complete it, so it'll actually be due not this Monday, but next Monday at midnight. Okay? So you guys are good to go. Have a great weekend, and I'll see you guys on Monday.